Alright traders, I'm back again with another video. This time we want to take time and talk about two pairs, the Euro Aussie and the USD CAD. USD CAD is going to be a continuation of trade that we were in, and we're out of that trade because today's Friday and we like to close out our trades. We don't want to do any carry trades over the weekend unless it's something that I really would like to stay in, and usually I don't really like to stay in any over the weekend because there's areas that you can get back, get back into the trade. So I'm going to show you where those areas are, and we're going to go over a pair that we didn't talk about the other day. But on the 4-hour time frame, you see these lines here, this red line mixed with this light green line. Then you have this light blue line and this dark blue line. I'm going to show you what those are. We'll go to the daily time frame. When I was getting my bias of the market and I was looking at the daily time frame to see which way I want to be going, I saw the market break through here. When it broke here and closed below here, I wanted to get into a trade. So the market reversed a little bit with one candle, went up here, came back, and then you saw this level right here barely get broken. You should have been in the trade right here, and you put your this would be your support level right here. When that level got broken, you get in a trade on this break of this candle. Well, we didn't get in there, so we made our support line right here, and then the market broke down, and then you could see this support line, how the market broke down, and then it came back up to that level. Should have got into the trade there, or else you could have waited till the market broke this level here, because when the market retraced here, stayed inside the candle, and then it broke. Finally it broke right here, so you have this level right here. If you see where I would have put a line, and then I get in on the break, and then I take this, put a stop loss a little above this, and ride this all the way down here. And see, I'm on the daily time frame, and when I see a change of sentiment here with the market breaking through the cloud, I know that I want to start looking for a really good long run on this pair, because knowing that this daily time frame has to run for a while once it breaks through and changes sentiment. So we go to the 4-hour time frame, and that's where we really get into the trade. That's where we look for our levels where we want to get into the trade. Now on the 4-hour time frame, there are a few things that we're looking at here, and I'm going to show you these. But if you see that level up here, it looks even better on the 4-hour time frame, because what you do here is you put this light blue line in to represent the Kumo, the bottom of that Kumo, as I showed you on the daily time frame. So you know already we're in a downtrend on the 4-hour time frame. Alright, so now we know that we want to wait. We know this is a strong level, so if we took anything up here, we know this level will be strong, and maybe the market's going to bounce back up and go the other way. But being that it broke through, and then it broke through our support line here, we hold that support line as strength. So what you do is you put your line right here. See this candle? Well, you wanted to get on this candle right here, but if you didn't get in on that candle, you see this broke right here, and then you put a stop loss above here. Wait for it to break this level again. When it comes all the way up, comes down, breaks that level right there, comes down, and then you see the market goes back up to this level, this bottom level right here. And that's all the market does, goes down, comes back up to the next support level. But if this is where you would have gotten to the trade right here, rode this down, it came back on you, you get nervous. Some people get out, but then here it goes and continues down. Now the thing about this trade right now, two things about this trade. You see you're making lower lows. Here's a lower low right there, lower low right here, lower low, and then a lower low. Then here's a low, but it's not lower than this low. It's the same. So maybe this market's changing sentiment. What it is going to be a reversal, a retracement on the daily time frame. So you see how this nice slope is here, right? And then now it's starting to flatten out. So maybe this lower low, it's not going to break this level. Maybe this level holds, and then the market reverses and does a retracement, which would be on the daily time frame. You could even show it on here. But basically you would take your Fibonacci retracement tool and you will put your retracement from here to there. But I'm going to do that on the daily time frame. See, this computer is slow. I need a new one. Something that I can work quicker with. Alright. So now this is long term. You're thinking here long term. So you got to look at this and see what's going to happen here and be prepared for this. You're going to put a Fibonacci retracement level there to here. We're a little off, so let's straighten that up. And then we'll move this one right where it should be. Okay, so now I'm going to show you what you're going to be looking at long term. Now, if the market does break, and if you're on the daily time, on the 4-hour time frame, this is going to be the level right here, and that's probably where the Kumo cloud is in there. It'll break above that level. You'll know that you're going to be in a retracement. So the market could retrace. It's going to go down, down, down. Then it can retrace up to this 23.6, 38.2, but more likely 50% retracement level, which is going to line you up with the cloud, and you're going to see a breakthrough, and you're going to think that it could go. But you got to remember there's a 50% retracement level there, and you got to remember that maybe price won't get through that level. So what you would do is you want to trade off of that 50% reverse, 50% retracement level, and go to take a short trade, right? Or else you could take this, once it breaks, like I said, you take it to the 50% retracement level. All right, so that's looking long term, and I hope you understand what I'm talking about. You know, we're going to be going trading against the trend because we know that it's a reversal, that it's a retracement on the daily time frame. So we know that the daily is in a retracement, and we expect the retracement of the daily to be to maybe the 23, 38, or 50% retracement level, right? And if it's one of those levels, we decide, okay, we'll take a trade on the trend reversal, going opposite of the trend. So we take this trade to one of those levels, or else we wait for the trade to get to those levels and see that it holds and go short again. So on the 4-hour time frame that we're trading, we'll look for this. Now, as I told you, you were making lower lows and then you stopped here, so we know maybe the market's gonna go the opposite way. So what we'll look here, and our bias will be on the daily time frame, our bias would really be bearish. But if we look on the 4-hour time frame, our bias would be bullish. So we have conflicting signals, but we know that on the daily time frame, the conflicting signals are caused by a retracement, because the daily is going to retrace to one of these levels probably. Okay, so you could get a break above the cloud, and then see this level here. You wait for the break above that level, because now all your Ichimoku signals will be bullish because you'll have a crossover. The width of this is already thin, so this will cross over. You have a TK cross, this will be a TK cross, you have a Kumo twist, and you have your Chiku span. Everything should be bullish by that time. By time price comes up to here and breaks through this level, we wouldn't do it off of the cloud, because this support level, this resistance level, is too tight right here against the cloud. So we would wait for it to break through that level and put a stop below that cloud, this thin cloud, and then try to ride the market to one of these levels, being very careful because we're going against the trend really. But if you look at it, you won't be going against the immediate trend, but the bias on the Ichimoku system will be still bearish. It won't be bullish until it goes on the other side of the Kumo. Okay, so I hope you understand what I'm talking about here, and this is long term. Now short term, if you're still following just a short trade, you're going to wait for price to break below this level right here, where all this support is, where this red line is. This is all support. It held one time, it held here. So what's going to happen more than likely is the market's going to stay in a range here for a little while, and you'll get that like I usually show you. I draw a box. The market's going to range in this area for a little while, and then finally it may break that level and take off and go up, or it'll break low. So we'll look for a break low here for a short trade, and we'll look for a break above this for a trend reversal trade, which will be retracement level off of the daily time frame, and we'll look for those levels that I showed you. Now we'll go to the US dollar CAD. This is a pair that I was in the trade, and I'm going to show you what I did here. Okay, we already have a video up about this trade, but you can see I got in right here and I got out right here. Got out at the end of this here. Now the reason I got out of this trade is because I know Friday, it is 12:30 here, that I know that the market's not going to break this level today. There's not enough volume or anything and no, it's not going to break this level today. So I can see this level was holding as a support level, so I hit this level, got out of the trade. But you see this candle here, we had a reverse little retracement level, a retracement, and it moved up to this level here, which was an important level for me, because you can see this is where basically I was basing that support level right here for this support. I was basing that where I got into the trade. Well, the market came back up to that level. Okay, well, when it came back up to that level, I put more on the trade, just added to my trade, because I said, well, the market came up, it's going to hold this level, plus it's again up against the resistance level and the Kijinsen. So I said I'm going to put more on. I put some on and rode this down to here and got out. So you could see where I got right there. That trade was good for 48.2 pips. And then when I got in here, this trade was good for 44.8 pips. So I had two trades, profit on both, got out. Now what I'll look for next week is for price to break this red level, this red line right here. When price breaks that red line, I'll get into the trade and I'll write it to the level that I already had said that we would. Okay, and that level is right here, 98.98069 right there. Our bias is still short here, and we're looking for price to break this level and go down, continue down to here. So we'll be looking for that next week. All right, so you guys can do this on your own. You can find setups like this, easy setups. This is really easy, and do this trade just like this. All right, well, traders, today's Friday. It's the close of the week. I'm about to close this out, and just hopefully, traders, I'm helping somebody out. If you need any help, just let me know. I don't mind doing this. I like doing this. Just trying to be a blessing for someone. So traders, have a great weekend. And until next time, God bless.